One of the good things about being a pass-through entity is you may be able to qualify for this deduction called a qualified business income deduction. Essentially, 20% of your profits is a personal deduction on your tax return. So it's based on your business income. It's not a business deduction, it's a personal deduction, but it doesn't cost you anything. You get it because you qualify. And so that's a really good write-off. The other thing I want to talk about and just mention is that there's a growing number of tax credits. And tax credits are a dollar for dollar reduction on your taxes. If you think of a tax deduction, the deduction is worth only as much as the tax bracket you're in. So say you're in the 22% tax bracket, a $1,000 deduction saves you $220 in taxes. But a tax credit, a $1,000 credit, saves you $1,000 in taxes.
So you've started a small business, but with tax season just around the corner, it's time to look at how taxes will affect your new venture. Up next, Barbara Weltman, attorney, founder of Big Ideas for Small Businesses Incorporated, and author of J.K. Lasser's Small Business Taxes, explains what you need to know.
So, Barbara, what do beginning small business owners need to know about taxes that's different than paying taxes when you're not running a small business?
Well, taxes are just part of doing business. You have to deal with taxes. And there are different kinds of taxes. You have income taxes, you have employment taxes. If you're self-employed, you're going to be paying self-employment tax. There are excise taxes. There are various penalties, and they're called taxes. So you kind of have to know about all of these different taxes. And not only do you have to know what's going on at the federal level, but you may have state and local taxes to contend with as well. So there are certainly a lot of moving parts that you have to know about. I think the important thing to know is that most small businesses do use CPAs or other tax professionals, perhaps just to prepare returns or do payroll. But the important thing for small business owners to know is that they have to understand what taxes are all about, because it influences business decisions. And as the saying goes, the buck stops with you. You have to know the tax implications of your business decisions. So do you hire an employee? Do you use an independent contractor? Do you buy or lease equipment? Do you start a retirement plan, and which kind of plan? What kind of health coverage do you offer? There are so many choices, especially when it comes to small businesses. There are special options for small businesses. So there's certainly an awful lot to learn and to master, really.
How does a business owner go about filing their taxes for the first time? You talked about getting a CPA. I mean, maybe that's the first step, but how do you go about this process? What's different than, say, filing your personal income taxes?
The first thing that I sure hope that you have been keeping good books and records, because as a small business owner, you're required to do so. You know, for your personal finances, maybe you have records, maybe you have a shoebox with receipts, whatever. But for business, you're required by tax rules to keep good books and records. And having those good books and records enables you to do your taxes. So you may be able to do it yourself using software. I certainly don't recommend doing paper returns anymore. Too much opportunity for math errors and missed opportunities. So at least with software, sort of prompts you what to do. Or turn to a tax professional. And there are various types of tax professionals. A CPA isn't the only option. There are many different ways you can get your taxes done. If you don't know a tax professional, get a referral. I mean, just like you'd find a pediatrician for your child by asking your neighbor, ask your banker, ask your attorney, ask other local business owners who they use, and get a referral to somebody good. I think this is just kind of my take on it. And maybe you find this surprising, since I write a tax book every year to tell people what to do with the book. But then I tell people, well, go get a tax professional. it's kind of worth the money that you would pay a tax professional because it will help you sleep at night. It will help you find every opportunity for tax savings and make sure that things get done correctly.
You mentioned there's a couple of different tax professionals. What kinds of different tax professionals? What are the differences?
Okay, well, there are tax attorneys, which you certainly don't need to complete your returns. Those are people who primarily handle tax problems if you get audited and there are certain, really challenging issues. But there are enrolled agents who are licensed in a sense by the IRS. They get that certification. They have continuing ed requirements, so they're supposed to be knowledgeable in what they do. There are CPAs, but there are regular accountants who may act as enrolled agents. There are H&R Block kind of storefront places that will handle those kinds of things. So there is an IRS website where you can find a tax professional and see their certifications, and you can search by zip code, and that may be one way to go. And again, you can check their qualifications and what they're about.
What form or forms does a small business owner use to file their tax returns? Obviously, there are different kinds of forms for different kinds of tax returns, and it depends how your business is set up. But what form do you use for this in the first place?
Well, again, as you say, it depends on how your business is set up. So, for example, if you are a sole proprietor, in other words, you haven't taken any legal steps to form anything else, or you are a one-member limited liability company, there's only one owner of an LLC. If you're a one-member LLC, you're treated just like a sole proprietor. Actually, the law calls you not very nice, but a disregarded entity, like you don't even count. But what it means is that you're going to file a Schedule C with your personal income tax return. So Schedule C will be used to report all your business income and expenses, and that goes along with your Form 1040, your personal income tax return. So there's no separate filing if you fall into that category. And independent contractors, same thing. A one-member LLC can opt to be treated like a corporation and taxed, let's say, like an S corporation. You have that option. So if you are a limited liability company with two or more members, you're a partnership, you're going to file Form 1065. Now, what this means is the entity, the partnership, the LLC, doesn't pay taxes. What it does is it reports its income and expenses on the form, and then it issues to you, the owner, a Schedule K1, which reports your share of this, your share of the business income or loss, your share of certain items that pass through separately to you, like if the partnership made charitable contributions, that passes separately to you, but it's your share of that. So if you're a 50% owner, you're going to get 50% of what the partnership reported. The next kind of business would be an S corporation. You just incorporate. But for tax purposes, you are a pass-through entity and treated more like a partnership than a corporation, meaning that the S corporation files Form 1120S and then a Schedule K1 to tell you, the shareholder, your portion of business income and expenses that you report on your personal return. So again, the S corporation, in most situations, there are some exceptions, don't go into, but most times the S corporation never pays taxes. You're doing this on your personal return, and each owner does it separately. Let's say you have an S corporation with two owners. You're going to file the 1120S, and each owner gets 50% of what's there, but the owners may be in different tax brackets. So the owners may be paying a different rate of tax on the profits. And then, of course, the last entity is a C corporation, a regular corporation. That's its own tax-paying entity. It files Form 1120. It pays its own taxes, its own estimated taxes. And you, as the shareholder, get either salary if you're working for the corporation, or maybe the corporation is paying dividends to you and you report what's distributed to you.
I think a lot of beginning small businesses, particularly solopreneurs, they might go the LLC route. Could you tell us a little bit about the differences between taxes for an LLC and those of an individual?
Well, from the tax perspective, again, it depends on if you have just one member, one owner, or two or more. So if you have one owner, you're pretty much the same as if you didn't take any legal action. Now, the legal action is great because it gives you personal liability protection. But from a tax perspective, it really doesn't make any difference. But if you have two or more owners in the LLC, then you're more like a partnership. You're going to be treated tax-wise as a partnership. I think you're right. The LLC is probably the most popular kind of entity these days because it gives you that personal liability protection. But from a tax perspective, it's not that dramatically different from other options.
You mentioned it a little bit, this LLC that has elected to be treated as something else, say an S corporation. Does that make any significant changes in the way you pay your taxes?
That's primarily the driver for doing that. Because if you elect to be treated as a corporation, and then you elect S corporation status, it enables you to take a salary and have the withholding on your salary cover the taxes that you'd have to pay on not only the salary you get, but also on your share of the business profits. So it eliminates for many owners the need to pay separate estimated taxes, which I think are challenging for owners who are just starting out because for many, this is a new concept. I like to think that most of these people are, they're W-2 employees. So they've always had withholding handle their tax obligations, but now the burden is on you to ante up.
Does an LLC, just an LLC, pay quarterly taxes?
Well, the owner would. Remember, the LLC, the partnership, the S corporation, they're not taxpayers. They're pass-through entities. So everything passes through to owners. So the burden of paying taxes falls on owners, and they have to pay estimated taxes, which happens 4 times a year. It's called quarterly, but it doesn't fall evenly in quarters. So that's kind of a misnomer. So unless you have some other way of handling these taxes, perhaps you have a spouse who is an employee who's willing to have huge withholding to cover your burden, you're going to be paying estimated taxes. And the estimated taxes has to cover your taxes on the profits, and if you're self-employed, also your self-employment tax. But self-employment tax is a little confusing for individuals who have been W-2 employees. They're used to paying the employee share of FICA. And self-employment tax is essentially you're paying the employer and employee share of FICA. So you're paying twice as much, although you do get to deduct 1/2. There is no withholding. There's no depositing the money or anything like that as there is with a payroll tax. It gets wrapped into your estimated taxes, which are 4 times a year. And the first estimated tax for 2023 is April 18, 2023. We're not too far from the first payment. The second payment is June 15th. The third payment is September 15th. And the fourth payment is going to be January 16th of 2024. Now, also a reminder that you may be having to pay estimated taxes on the state level and check their due dates, which may be the same or they may be different.
Well, that's it for another episode of Small Biz in 15. Thanks again to Barbara Weltman. Please like and subscribe if you enjoyed the show, and please leave a comment and let us know what topics you'd like to see covered in future programs. For more small business news and tips, join us at smallbiztrends.com.